Okay, hi everyone, welcome to today's session. So for today's session, we are going to be talking about correlation and how you can use it to improve your trading. So we'll give about 2 more minutes to let more people join our session before we get started. So in the meantime, let me know if you guys can see my slides and can hear me. And yeah, we'll begin in about 2 more minutes. Thanks everyone. Okay, let's go ahead and get started. So as per usual, a disclaimer and risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. Okay. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be a speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today's session. So we're going to start off by talking about what exactly correlation is, understanding the positive and negative correlation, understanding strong versus weak, and then we'll look at correlation across multiple timeframes and using correlation to identify support and resistance and breakouts. And we'll look at a couple of charts as well, because I don't think we have that many slides to get through today. So, yeah, you feel free to just pop any requests into the chat, and I'll be happy to go through them after my slides. Okay, so firstly, what is correlation? So it basically refers to the statistical relationship between two financial instruments or assets. So in this case, we'll be looking at currencies and commodities. So positive correlation means that the two assets move in the same direction, while a negative correlation means that they move in opposite directions. So, for example, if the price of gold and the value of the US dollar have a negative correlation, then when the price of gold goes up, the value of the US dollar typically goes down and vice versa. So I have a scale of correlation coefficients here. just for your reference. So you can see very high correlation tends to range from 0.8 to 1.0, while a very low correlation will range from 0 to 0.2. Okay, so a perfect positive correlation is +1, while a negative perfect correlation is -1. So we'll typically look for strong correlations with values of 0.8 and above or below minus 0.8. So I'll get into that in a little bit. But basically, traders use correlation analysis to identify potential trade opportunities and manage risk. So, for example, if a trader wants to hold a long position in a stock or a specific currency, they may want to consider taking a short position in a negatively correlated asset to offset some of the risk of the long position. So, it's important to note that correlations can change over time, so traders must continually monitor their relationships. And lastly, correlation does not equal causation, meaning that just because two assets have a high correlation doesn't mean that one is causing the other to move. Okay, now let's look at a correlation table. So my FX book actually has a correlation table that you can use to find the most and least correlated, most positive and most negative correlated currencies in real time. So you can make use of the filter here, and adjust the time frame to whatever you prefer. So we typically want to look for correlations that are higher than 80 and lower than negative 80. So you simply input that into the filter and it will highlight all of the currencies that match what you have requested. So this is a really easy way of finding correlations. So you can see, for example, between Oz franc and Euro AUD, can see that they have a pretty strong negative correlation of minus 90.9%. Okay, and yep, so it'll highlight it like this. I'll show you guys on the website as well. So for example, this is what the website looks like. It's just myfxbook.com. Yeah. So this is the correlation filter. We'll just input in currencies that are less than 80% and correlation higher than 80%. Okay, time frame we normally will look at, this really depends on your own trading strategy. So if if you're a swing trader or you prefer scalping, really depends on you as a trader, but we normally will look at either 4 hours or 1 day. So if we look at 4 hours, okay, so you can see immediately it highlights all of the um, currency pairs that have a really high rate correlation. You can also filter it to look at the specific um, currency pairs that you're looking at. Okay, let's get back to my slides. We'll come back to this in a bit when we look at our charts at the end. Okay, so another correlation table here is CMC. There are quite a few correlation tables on the market, so feel free to just Google it. But the one that we normally like to use is MyFX book. Okay, now let's look at currencies that are positively correlated. So currencies that are pretty similar and have a positive correlation, not always, but quite often, would be your AUD and NZD, so your Aussie dollar and Kiwi dollar. And we also have the euro and pound. And lastly, we have the dollar index, CAD, and franc, Swiss franc, that tend to be positively correlated. Okay, so in this example that we're going to look at, we're looking at the AUD CAD and AUD franc. And you can see it has a pretty positive correlation of 84.2%. So remember, we normally look at the positive, we only take into account a positive correlation of plus 80%. and minus 80%, less than minus 80%. Okay, so this is our AUD franc on the 1 day time frame. And if we compare this chart to our Canadian dollar, side by side, you can't really see the similarity. But if you compare it using this tool on TradingView, which allows you to compare two currency pairs with like side by side on the same price chart, you can see it a lot clearer how they are positively or negatively correlated. Okay, so if we look at pound dollar and pound yen, this is also an example of a very positively correlated um, pair of currencies. Okay, pretty straightforward here, I think. Another example would be your Kiwi yen and Aussie yen. As we mentioned earlier, Aussie dollar and Kiwi are very positively correlated. I mean, pretty often they are. Okay, another example, AUD and Kiwi dollar. This is our Australian dollar and US dollar, and Kiwi dollar and US dollar. Again, side by side, comparing the two, you can see some similarities, but if you look at it on the same price chart, it's a lot clearer how they are very similar. Okay, again, this is on our 1 day time frame, um, but I think it will work well on our 4 hour as well. Okay, again, we're looking at SPX now with our euro dollar. These two also tend to have a pretty positive correlation. Okay. Okay, now let's look at currencies that are negatively correlated. So the most popular one tends to be our DXY and gold. Um, and I'll show you in a bit how that works. Okay, but another one is our dollar index, so your DXY and the Aussie dollar. So in this case, we are going to look at our example, which is Euro Aus and Aus franc with a minus 90.9% negative correlation. Okay, so this is our Aus dollar, Swiss franc, and this is our Euro dollar. So you can kind of see the prices changing. Okay, and if you compare it on the same tool, same chart, you can see it a lot clearer. So when prices are dropping on our Euro Aus, we see the opposite effect on our Aus franc. Okay. Okay, another example, we have the AUD and dollar CAD. Pretty straightforward, you can just see how the prices are negatively correlated. So for example, how you can use this is if you're going in for a buy on our Aus dollar, you would then go in for a sell on your dollar CAD. Okay, and if it's positively correlated like we saw before, then we just go in for a buy on both. Okay, so this is kind of a good way to manage your risk as well. Okay, another example here we have um SPX and our gold. So SPX and gold also tend to be negatively correlated. Okay. Um, okay. So here's how we can use correlation to identify breakouts. For example, here we have gold. We see the price of gold shooting up, and we see the price of DXY dropping at the same time. Okay, so you can see we have this dotted line here. So this is our resistance level, and we see price breaking above that resistance level. So we can also expect our US dollar to be the same, but instead, or rather not be the same, but be the opposite. So instead of going in for a buy, we're going for a sell, and we're expecting it to break below this support level. So that's how you can use this to use correlation to identify breakouts. Okay, another thing that you could use with regards to correlation is using your news events. So, um, for example, if you would like to, if you use fundamental analysis, right? So one way that we use fundamental analysis is we use forexfactory.com, but you can use any economic calendar that you want. So if we look at this week's events, for example, um, okay, I'm looking at Wednesday to Friday. So every Thursday we have the US unemployment claims results. Okay, and another really high impact event would be your FOMC meeting which we don't have this week. So what we have done on this calendar is we normally will filter out the medium to high impact events so that it just focuses on the events that will have the greatest impact on our charts. But if you click on this green icon, you have a lot more events that include your low impact and your non-economic events. You can also filter out any event types and any currencies that you're specifically looking at. Okay, so you can see there's a lot more events to get through per week. So instead, we just focus on the medium and the high impact events. Okay, so you can pick out a few events that will have the greatest impact on our charts. So in this case, in this example, we're looking at the US unemployment claims and the central bank interest rate decisions. These normally come together with our FOMC meetings that we talked about earlier. Okay, so on 15th June, okay, I apologize for the words covering our chart a little bit, but this is our DXY, so our US dollar index. And on 15th June, unemployment claims were released, and this is on our 1 hour time frame. So at 12 o'clock, once the data was released, we saw the price of DXY drop significantly. Okay, you can see our MACD as our momentum indicator as well, showing us a bearish momentum. On the other hand, we saw gold actually shoot up significantly, again on the same time frame, 1 hour, and also at the same time, at 12 o'clock on the same day. Okay, so this links with what we mentioned earlier about how our DXY is negatively correlated with our gold. So another example is your FOMC meetings. So we have the price of DXY shooting up after our FOMC meeting at 6 o'clock. Okay, 6 p.m. GMT, and we saw our MACD giving us a bullish momentum as well. Again, this is our 1 hour time frame. So you can use this method on any time frame, but I think it works better on lower time frames. So maybe 30-minute, maybe even 15-minute, but we won't go below 15 minutes because it tends to get a bit too noisy on the lower time frames. So FOMC meeting at the same time again, 14th June, 6 p.m. GMT, we saw prices have the opposite effect. So prices shot up on our DXY because we expect the opposite effect, and prices dropped significantly on our gold, giving us a bearish momentum on our MACD indicator as well. Okay, so again, another example, we're using unemployment claims here. So on our DXY, we're looking at the 30-minute time frame, and we see the price of DXY shoot up since the result of unemployment claims or the data release was 209K, which was lower than the forecasted 211K, which is obviously a good sign for the US economy since there are lower unemployment claims for that month. So it gives us a good, I guess we are expecting the US economy to do better. So the price of the XY shot up on that at that time. And at the same time we see gold or euro dollar drop significantly. At the same time, 12:30 p.m., 12th of October last year. Okay, so that's another way to use correlation here. Okay, so I still have some time. So let's go ahead and take a look at some charts. Do you guys have any requests for any charts that you'd like me to go through? Mm. Okay, let's go ahead and look at DXY first. So here's our DXY. Let me see if you guys can see my charts. Okay, yeah. So on our DXY, we see um prices moving upwards. So I normally like to look at our charts on the higher time frames first so that we get an idea of the direction that prices are headed towards. Okay, so on our weekly time frame, we see prices moving in this uptrend. Okay, in this ascending trend line. And if we actually compare this on our daily time frame, again, you see prices moving in an uptrend. And I'm gonna compare this to gold, since we mentioned earlier that gold and DXY are negatively correlated. So if we look at it on the same price scale, okay. So how you get to that tool is you basically click on this plus sign that's right beside your symbol. And I have gold here, same percentage scale, and you can see that it is negatively correlated. Okay. Yeah, but you can see that sometimes, so for example, over here, it is pretty proportional in the sense that it is price increase this much on our DXY, whereas on our gold price decrease that same amount, right? But it doesn't happen like that for like all of it. Okay, so you can see here sometimes gold shoots up significantly, whereas DXY only drops slightly. Okay, so the main key point here is that they are negatively correlated, but they aren't proportionally negatively correlated, if that makes sense. Okay, so that's why it's better to use this that method that we showed earlier with regards to using the news events that works better on a shorter time frame. So either your 1 hour, 30 minutes, yeah, those time frames will work better for that kind of strategy. Okay, now let's go ahead and analyze our DXY first, and then we'll look at gold. And then and then yeah, feel free to just pop any of your requests into the chat. And yeah, let's get started with DXY. So here we have prices moving in an ascending trend line. So just to recap, what makes a valid trend line is if there are at least 3 touches on your trend line. So here we have 1, 2, 3. We actually have 4, in fact. Okay. Next step is to go in with our horizontal levels. So I'm going to place my pivot here first, and my first resistance up here. My first support just down here. Okay, so next we're going with our Fibonacci levels to support these horizontal levels. Okay, so I'm going to start off with projection. Okay, so you can actually see that at this 100%, price actually tested this level before, and it's been tested a couple of times. So I'm going to label this as an intermediate support level. Okay, and even though the 78.6 lines up with our pivot, we can't use it anymore since price has already broken out of it here. So the shape that we're looking at for this Fibonacci method is this kind of lightning bolt shape. Okay, so it's no longer valid. Just keep the 100%. Okay, our next step is here at my 50% retracement, and my 61.8 also line up with my first support and that intermediate support. Okay, my 61.8 also lines up. Okay, that might be all the levels that we have for now. Okay, so now I'll go in with my indicators. So we normally will advise to follow the existing trend. Okay, so which we have identified as an uptrend. So we normally will expect to continue to move upwards. Okay, so let's see if our indicators support our analysis. So I'm gonna start off with Ichimoku and MACD, and I like to start off with these two indicators because at one glance you can see exactly what the signals are. Okay, so you can see both of our Ichimoku and MACD are giving us a bearish signal. So let's pull out some other indicators to see if there's anything else. Let's look at RSI and stochastic, and our moving averages, exponential and simple. Okay, Bollinger Bands aren't telling us much, so I'm getting rid of that. Moving averages, you can see price has recently moved above both of the moving averages, so that is giving us a bullish signal. Okay, I'll move Ichimoku and MACD since they don't support analysis. On our stochastic, we have what is called a hidden resistance, that hidden support. Okay, so if you take a look at the levels that I'm highlighting now, right, all of these levels, price actually saw a bounce up, and also the price made a higher low over here. Whereas on our stochastic, you can see that it's at the same support level. Similarly, it happened again over here when price made a higher low and price bounced off over here. And we also see that same support level here. Over here, price actually dropped slightly, okay, but we also saw that bounce. So we are expecting price to continue to move upwards here since price recently bounced off of this support level. Okay, so we are expecting it to continue to move upwards. Okay. Okay, so since we are seeing this upward trend on our DXY, we would probably be expecting the opposite for our gold since they are negatively correlated or they tend to be negatively correlated. So now let's go ahead and take a look at gold. So on our weekly time frame, we can see that gold is pretty bullish. It's been moving in a trend. Okay. And on our daily time frame, um, we see that slight drop over here. And on our 4 hours time frame, yep, we see prices dropping a bit more here. Okay, so now let's go in with our horizontal levels again. Okay, so first thing, I'm gonna start off with our first support over here. For my first resistance, I'll maybe label it here. Okay, and my pivot, I'll just label it here at this swing high. Okay, now going in with our Fibonacci levels again to support those horizontal levels. You can see my 50% lines up nicely with my first support. Okay, my 61.8 also lines up nicely. So again, the shape for that projection is like the same lightning bolt shape, like this, or like a flash kind of symbol. Okay, I'm going in with another retracement here. Okay, you can see my 38.2 lining up with my pivot. Okay, I've had some questions about the pivot. The pivot is basically your entry. So it could be your buy entry, a sell entry, or you can label it as if support or resistance level as well, if you're more comfortable with that. Completely up to you. Okay, so what we have here at our first support is actually a confluence area, which is basically when two or more Fibonacci levels line up with each other. And it's a pretty significant level because price tends to be attracted to this level, as we've seen. Okay, you can see price reacting off of it once, twice, and 3 times recently. Okay, but price might not be able to break out of it. Okay, I think that might be all the levels that we have. So previously we saw on our DXY that we are expecting prices to move upwards. And here we are expecting prices to move downwards since we see, can also, firstly, we see price moving in a downtrend. Secondly, we see prices already reacting off of this pivot. Okay, so that's already a huge sign. Now let's go in with our indicators again. I'm going in with Ichimoku and MACD. Okay, so on our Ichimoku, price is giving us a bearish signal since price is moving below the cloud. MACD is giving us a bit of a bullish signal, so I'm going to get rid of that. Let's maybe look at RSI, stochastic. Okay, RSI isn't telling us much. Okay, stochastic isn't telling us much either. Okay, now let's look at our moving averages, simple and exponential. Okay, they're not telling us much as well. Let's look at our Bollinger Bands as well. Okay, so you can see price actually reversing off of the upper band of our Bollinger Band. So that is supporting our analysis. Okay, so you can see I just interchange between about 5 of these indicators. Okay, so because there are many indicators out there that you can use, and half of them will give you a bullish signal and half will give you a bearish signal. So it's important to just pick a couple that you know how to use and that you're comfortable using and just interchange with them to support your analysis after you've done these technical and graphical analysis. So just using your Fibonacci and your horizontal levels, and then go in with your indicators to support that analysis. Okay, any questions so far? Okay, if not, let's go ahead and look at my FX book and see if we can pull out any currency pairs that are positively or negatively correlated. So let's maybe look at the 1 daily time frame. Okay, so we see the Aussie Sing dollar and Aussie yen have a 92.9% positive correlation. So let's go ahead and look at that. Or maybe let's look at Euro yen and Aus yen instead. Okay, so comparing it on the same scale, you can see how similar in price both of these are. So if we refer back to what we mentioned in our slides, remember that our Oz and our Euro tend to be quite positively correlated. Okay, so you can see very clearly this 93.8 is a very strong positive correlation. In fact, our CAD yen, in fact, CAD and US tend to have a very positive correlation as well. Oh, yeah, tend to have very positive correlation as well. Um, Giving us a really high, whether that, yeah, 97.1% correlation. Okay, if we look instead at a negative correlation, let's look at pound dollar and dollar sing. Just to spice things up, we'll look at the Sing dollar as well. Okay, you can see the negative correlation here. So let me just get rid of all of the drawings. And this is our daily time frame. So I'm going to move it back to my daily time frame and you can see it a lot clearer now. So with over here, we see price of British pound go up. And here we see the price of Singapore dollar drop. Okay. So this you could actually use both of these to hedge your position on either of the currencies. Okay. So since we're looking at pound dollar now, let's go ahead and analyze this together. So I'm just going to place my pivot over here at this swing high. Okay, and my first resistance I'll place up here. My first support down here. Okay, so there isn't really a clear trend here with regards to pound dollar. Okay, on a weekly time frame, we do see it moving upwards. But on our daily time frame, kind of fluctuating. Okay, let's see if we have a trend channel. Okay, no. Oh, actually, actually we do have this ascending trend channel. So basically, a valid trend channel needs at least 2 touches at top and 2 touches below. Okay, which we do have here. So since price is moving in this uptrend, we are expecting it to continue within this ascending trend channel. So I'm going in with my Fibonacci levels again, starting off with a retracement. Okay, my 78.6 lines up nicely with this with my pivot. Okay, I'm gonna place an intermediate resistance here as well, since it's a swing high. You can see that 78.6 lining up nicely with that level. Okay, my 100% as well. So for Fibonacci, your levels don't have to line up exactly with the horizontal levels because as I mentioned, we're looking for confluence areas instead of specific levels. Okay, so as long as it's near it, that's good enough. Here I'm looking for retracement. My 38.2 lines up nicely. Again, another retracement here. Okay, my 23.6 lines up nicely as well. 23 and 61. Okay, so we are expecting it to continue to move within this trend channel. So it might bounce off of this pivot, or it might break below it, below this pivot. But ultimately, we are expecting it to continue within this ascending trend channel. Okay, so now let's take a look at our indicators. Okay, price is moving above the cloud, so it supports our analysis. MACD is also giving us a bullish momentum, so they both support our analysis here. If we look at our Bollinger Bands, okay, that doesn't tell us much. We look at our moving averages, it's giving us a bearish signal, so it doesn't support. We look at stochastic and RSI. Okay, RSI is giving us a bullish signal with prices moving in this ascending trend line. Okay, but our stochastic doesn't really tell us much here. Okay, so that's for our pound dollar here. Okay, are there any other requests or any questions? So since we've done this analysis for pound dollar, we recently looked at Sing dollar as well. So you could just do the opposite analysis for our charts, for our US Sing chart to hedge your position against the British pound US dollar. If you are considering doing using our correlation strategy. Okay, if there are no other questions, thank you guys so much for joining me. I hope you guys found this session helpful. I'll stick around for a while if you guys have any other questions. But if not, that's all I got for you guys today. Thank you guys so much for joining me. I hope I'll see you guys again next week. Have a great rest of your week. Thanks everyone. Bye. Thanks everyone. See you guys next week.